Insurance feels simple until the claim is denied. You paid premiums. Something went wrong. You expected help. Then the insurer says the policy does not pay for it, or the documents are not enough, or a condition was excluded. That moment feels personal, but most claim denials come down to one thing: the difference between what the customer thought was covered and what the policy actually promised. Insurance is a contract, not a general rescue fund. The insurer agrees to cover specific risks under specific conditions. The customer agrees to pay premiums and follow the policy rules. When a claim arrives, the insurer checks whether the event fits the contract. A denial does not always mean the damage was fake. It may mean the damage was real but outside the agreed coverage. The first reason claims get denied is lack of coverage. Someone may have car insurance, but not the specific coverage needed for the incident. A homeowner may have property insurance, but not flood coverage. A health policy may cover certain treatments but not others. The word o insured can create false confidence because it does not answer the real question: insured for what exactly? Exclusions are another major reason. An exclusion is a situation the policy specifically does not cover. For example, a person may think water damage is covered because the floor is clearly ruined. But if the policy excludes gradual leakage, and the damage came from a pipe slowly leaking for months, the claim may be denied even though the damage is real. The problem is not whether water caused damage. The problem is what kind of water event the contract covers. Timing can also hurt a claim. Many policies require prompt reporting. If the policyholder waits too long, evidence may disappear, damage may worsen, or the insurer may lose the chance to investigate properly. Imagine a car accident where the driver repairs the vehicle first and reports the claim weeks later. The insurer may question what damage came from the accident and what happened afterward. Documentation matters because insurance claims run on proof. Photos, receipts, police reports, medical records, repair estimates, maintenance history, and incident descriptions can all matter depending on the claim. A policyholder may tell the truth and still lose the claim if they cannot support it. The insurer is not only asking, did something happen? It is asking, can this be verified under the policy? Misrepresentation is a serious reason for denial. This means the information given to the insurer was inaccurate or incomplete in a way that matters. It can happen during application or during the claim. For example, if someone says a car is used privately but it is actually used for paid delivery work, that difference may affect risk and coverage. The insurer priced one situation while the real situation was different. Non-payment of premium can also lead to denial. Insurance coverage usually depends on the policy being active at the time of loss. If premiums were missed and the policy lapsed, the insurer may deny the claim even if the event would normally be covered. This is painful because the customer may remember buying insurance, but the key question is whether coverage was active on the exact date of the incident. Deductibles, also called excess in some markets, create another source of confusion. A deductible is the amount the customer must pay before insurance contributes. If the repair cost is lower than the deductible, there may be no payout. If the loss is only slightly higher, the payout may feel disappointingly small. The claim is not necessarily denied. It may simply fall below the amount the policyholder agreed to absorb. Pre-existing damage can also create problems. If a roof was already damaged before a storm, or a medical condition existed before the policy began, the insurer may separate old damage from new damage. The claim may be partly paid, partly denied, or fully denied depending on the policy. This is why photos, inspection records, and honest disclosure matter before and after buying coverage. Wear and tear is not the same as sudden loss. Insurance usually exists for unexpected events, not normal aging. A home appliance breaking after years of use may not be treated like a covered accident. A Cara Euro S worn brake pads are maintenance, not an insurance loss. People feel frustrated because the cost is real, but insurance is not designed to replace every expense of ownership. Claim denials can also happen when the loss is caused by an excluded behavior. Driving under the influence, illegal activity, using property outside the allowed purpose, or failing to take reasonable care can affect coverage. Policies often expect the insured person to reduce risk, not increase it. If the customary Euro S own actions violate policy conditions, the insurer may refuse payment. Replacement cost and actual cash value can create disappointment even when a claim is accepted. Replacement cost aims to pay what it costs to replace the item, subject to terms. Actual cash value may subtract depreciation. A 5-year-old laptop may not be paid at the price of a new laptop. The customer expected replacement. The policy may calculate current value. Sometimes claims are denied because the requested amount is not supported. A repair estimate may be too high, a medical treatment may be considered unnecessary under the policy, or a lost item may not have proof of ownership. The insurer may approve part of the claim, request more information, or dispute the amount. The conflict may be about valuation, not whether the event happened. The claim process usually moves through steps. First, the incident happens. Then the policyholder reports it. Next comes documentation, review, and sometimes an adjuster inspection. The insurer checks coverage, cause, value, deductible, exclusions, and limits. Then it approves, denies, or asks for more information. Delays are frustrating, but many delays come from missing evidence or unclear cause. A denial is not always the final word. Policyholders can ask for the denial reason in writing, review the exact policy language, submit missing documents, correct misunderstandings, request escalation, or use formal dispute channels where available. The important move is to respond with specifics. Anger alone rarely changes a claim. Evidence, policy wording, and clear timelines are stronger. The best protection starts before the claim. Read the exclusions, know the deductible, understand limits, keep receipts for valuable items, take photos of property condition, report incidents quickly, tell the truth on applications, ask questions before assuming coverage. A policy is much easier to understand before loss than during a stressful emergency. The biggest misunderstanding is believing that insurance covers the category instead of the exact situation. A Euro OE have home insurance. A Euro does not mean every home problem is covered. A Euro OE have health insurance. A Euro does not mean every treatment is covered. A Euro OE have car insurance. A Euro does not mean every driving event is covered. The real question is always, does this specific event meet this specific policy a Euro S conditions? Insurance claim denials feel shocking because people usually learn the policy language only after something has gone wrong. But denials usually follow patterns: no coverage, exclusion, late reporting, missing proof, lapsed policy, misrepresentation, deductible issues, wear and tear, or disputed value. Once you know these patterns, you can read insurance less emotionally and more practically. The lesson is not to fear insurance. The lesson is to understand it as a contract with boundaries. Good insurance can be extremely valuable when the right risk is covered and the claim is documented properly. But the policy will not pay simply because the loss is painful or expensive. It pays when the loss fits the promise. That is the difference between expecting protection and actually having it.